Market news now. Asian markets were muted on Thursday as risk sentiment remained high on hopes for a breakthrough in the trade impasse between the United States and China. Now, with Chinese stocks taking a bit of a knock, but China's better than expected export numbers taming the fall. Japan's Nikkei rose marginally for the third straight session and touched a 2-month high, gaining the Hang Seng lost 0.2%, and the Shanghai Composite was flat. Wall Street closed higher as investors were hopeful that the United States and China could iron out a trade deal, and as benign inflation data suggested that the Federal Reserve would hold interest rates steady in the near term. The Dow Jones Industrial rose 0.44%, the S&P 500 gained about 0.33%, and the Nasdaq Composite was marginally firmer. The local market opened higher this morning, but the rand is struggling a touch. It weakened overnight as Eskom's electricity problems and poor retail sales data weighed on sentiment. Let's take a look at local and European markets now. I'm now joined by Chantal Marks from FNB from our JSE studio. Thanks so much for your time on SABC News, Chantal. Mining figures out a short while ago. What are they saying?
So it was actually a little bit of a disappointment. Mining production falling quite sharply in December, and it followed on from a pretty weak November as well. The main culprits were gold and iron ore. Gold was a little bit weaker because of a protracted strike at the Sibanye gold operations. And iron ore also, it seemed as if it fell off a cliff, but there was a really good reason for it. There was a bridge collapse in the Northern Cape on the iron ore export line. And because big iron ore miners like Kumba Iron Ore and Assor couldn't export, they actually did some maintenance on some of their mines during that time and decided to produce less. So it could be transitory, but it does point to a pretty weak end to 2018. It means that mining production will likely detract from GDP growth in 2018. And even though it sets quite a low base for 2019, it just shows us that there's still a lot to be concerned about in this space.
Sibanye Gold also coming out and saying they're restructuring. Around 6,000 jobs could be lost. What's their share price doing in response to that?
So Sibanye Gold share price has done quite well today. I think it's a combination of a firmer gold price, firstly. Secondly, they also put out a trading statement that guided for earnings to come in higher than what the market was expecting. The market was actually looking for the company to record a loss over this specific time period. And they're actually going to deliver a profit. And then the fact that they are embarking on the Section 189 process in loss-making gold mining shafts does point to a will by management to make their shafts more profitable, or to only operate profitable mines, which of course is positive for shareholders and therefore the share price.
Let's move away from mining and go to Dis-Chem. They released a trading update today showing growth, even in quite a challenging environment, and their share price is falling around 3%. Why is that?
So even though their sales number came in more or less in line with expectations, they did signal some weakness in their wholesale division. And what happened there is they've actually had some strikes as well. So they've had some labor action there, which means that they did see some stockouts in some of their stores, and it will have an impact on the profitability of the wholesale division. So from a wholesale division perspective, they have been under pressure for a couple of years, and they were guiding for a break even over this next financial reporting period. And because there's going to be an issue there from a margin and stockout perspective, perspective, they probably won't break even. So it's more a negativity around what near-term earnings is going to look like than what the revenue number looked like. What we could also see was, even though revenue looked quite good on the face of it, like-for-like store sales, so if you exclude new store openings, only grew by 3.7%, which tells us that for every store they're opening, they're cannibalizing a little bit on existing stores.
Okay. Let's take a look at international news now. Fresh round of trade talks between the US and China. How's the market reacting to that? Is there a sense of optimism?
Yes, definitely. So markets globally are trading higher. We would have seen the impact on the rand as well, because the US dollar has actually strengthened as a result. The expectation that a possible end or a possible delay to further tariffs would be net positive. That provided some support for the US dollar, which in turn has been negative for emerging market currencies. But generally, the market reaction is quite positive. I think market participants really are looking for a good news story here. It's been several months of uncertainty around this issue.
Now, a good news story for Nestlé is that they're going to be selling Starbucks products to people that they can use and consume in their home. It's about a $7 billion deal. How is their share price reacting to that?
So their share price has also been well supported today. It's not only the Starbucks deal. I reckon the Starbucks deal will be quite positive for Nestlé, but they also released better than expected results. And they've noted that they're quite happy to continue selling off some non-core assets or kind of low growth assets. One of the businesses that they mentioned was a Frankfurter business. So basically these kind of deli sausages that they don't see as a high growth area anymore. Potentially they could free up some cash from that. In terms of the Starbucks deal, definitely quite an attractive prospect for Nestlé. They'll probably market it separately as Starbucks coffees, and then they'll also be able to sell that into the Nespresso business, which has actually seen a declining growth profile of late. So overall, just a lot of good news for Nestlé today.
Chantal Marks from FNB, thanks so much for your time. That's all we have for now. It's time for a short break. I'll be back with more business news after that. Do stay with us.